Hey everyone, welcome back to the channel. Today we're diving deep into a comprehensive analysis of Wheaton Precious Metals, ticker WPM, a major player in the precious metals streaming space. If you're looking to invest in gold and silver without the headaches of mining operations, stick around because we're breaking down everything from financials to recent performance and even a SWOT analysis to see where this company stands. Let's get started. So first things first, why are we talking about Wheaton Precious Metals? Well, with gold prices soaring and economic uncertainty lingering, companies like WPM are getting a lot of attention from investors looking for safe havens. WPM isn't your typical miner. They operate a unique streaming model, which we'll get into shortly. For now, just know that they've been posting some impressive numbers lately, and I'm excited to unpack whether this stock is a glittering opportunity or if there are hidden risks. If you're new here, make sure to hit that like button and subscribe for more in-depth stock analyses like this one. Let's kick things off with a quick look at who Wheaton Precious Metals is. Based in Vancouver, Canada, WPM is a streaming company, which means they don't own or operate mines themselves. Instead, they provide upfront capital to mining companies in exchange for the right to purchase metals like gold, silver, and palladium at a discounted price. It's a low-risk way to get exposure to precious metals without the operational headaches. Founded in 2004, they've built a portfolio of high-quality, long-life assets across the globe, working with some of the biggest names in mining. Their CEO, Randy Smallwood, has been at the helm for over a decade, though there's a recent transition announced with Haytham Hodali stepping into the role while Smallwood moves to chair of the board. With a market cap of over $63 billion and just 44 full-time employees, this is a lean operation with massive scale. Now let's talk revenue. Wheaton Precious Metals has been on a tear, posting record annual revenue for 2025, according to their latest reports. For 2024, their full-year revenue came in at $1.28 billion, up from $1.1 billion in 2023. That's a solid jump, driven by strong production from their streaming agreements and higher precious metal prices. Over the past few years, they've consistently grown their top line, with revenue climbing from $861 million back in 2019 to where it is now. Their business model thrives on diversified streams. Think gold, silver, and other metals from mines like Salobo, Antamina, and Peñasquito. This diversification helps them weather volatility in any single metal's price. Plus, with projects like Blackwater and Goose ramping up, they've got growth baked into the pipeline. The key takeaway here? Their revenue isn't tied to just one mine or metal, which makes their income stream more stable than traditional miners. Moving on to earnings, Wheaton just crushed it in their Q4 2025 report. They reported earnings per share of $1.22, blowing past the consensus estimate of 93 cents. Compare that to 44 cents per share in the same quarter a year ago. That's some serious growth. For the full year of 2024, their EPS was $1.17, slightly down from 1.19 in 2023, but still reflecting strong profitability with a net income of $529 million. What's driving this? Higher metal prices, increased production from key assets, and their ability to keep costs low since they don't operate mines directly. They also announced an increase in their quarterly dividend to 65 cents per share, signaling confidence in their cash flow. For 2025, they've already declared record dividends, totaling 66 cents per share, which is a nice bonus for income-focused investors. Let's dive a bit deeper into what management had to say during their latest Q4 2024 earnings call. They highlighted record revenue and earnings, pointing to robust production growth across their portfolio. Key assets like Salobo and Antamina were called out as major contributors, and they're excited about the ramp-up at newer projects like Blackwater. Management also emphasized their strong balance sheet, minimal debt, and a hefty cash pile, which gives them flexibility for future deals. On the outlook, they're bullish on gold long-term, with CEO Randy Smallwood noting the metal's role as a hedge against uncertainty. They're also focused on sustainability, partnering with innovative companies like Cedos Water, which recently won their Future of Mining Challenge for tech that turns mining wastewater into reusable water. Overall, the tone was optimistic, with a clear focus on growth and shareholder returns. All right, let's pop the hood on their financial statements. Starting with the income statement, their gross profit margin for 2024 was an impressive 72%, showing how efficiently they turn revenue into profit. Net profit margin? A stellar 54.7%, which is rare for most industries but speaks to the beauty of the streaming model, low overheads. Looking at the balance sheet, as of the end of 2024, WPM had $818 million in cash and equivalents, up from $546 million in 2023, with total assets at $7.42 billion. Their debt-to-equity ratio is practically non-existent at 0.001, so they're not leveraged at all, a huge plus in a rising interest rate environment. Current ratio stands at 8.09, meaning they've got plenty of liquidity to cover short-term obligations. On the cash flow side, they generated over $1 billion from operating activities in 2024, though they spent heavily on investments in property and equipment to the tune of $658 million. Still, free cash flow came in at $369 million, giving them room to fund dividends and pursue growth. Return on equity is solid at 13.1%, showing they're making good use of shareholder capital. These numbers paint a picture of a financially sound company with a fortress balance sheet. Now let's talk valuation. At a current price of around $139.87, Wheaton's trailing PE ratio is sky high at 66.7, which might make you pause. But remember, this is a growth story tied to precious metals, and investors often pay a premium for stability and exposure to gold and silver. Their price-to-sales ratio is also elevated at 36.4, reflecting that high market cap of $63 billion against $1.28 billion in revenue. Looking forward, analysts peg the 25 forward PE at around 50.25, still expensive but trending lower as earnings grow. Compared to the industry average PE of 33.8 for the gold sector, WPM is trading at a premium, which could signal overvaluation or just high confidence in their future. Enterprise value sits at $65.5 billion, factoring in their minimal debt. For value investors, this might look pricey, but if you believe in a long-term bull market for gold, that premium might be justified. Let's break down Wheaton Precious Metals through a SWOT analysis to see the full picture. Starting with strengths, their streaming model is a huge advantage, low operational risk and high margins. Record revenue and earnings in 2025 show they're executing well, and their diversified portfolio across gold, silver, and palladium mitigates single metal price swings. They've also got a rock-solid balance sheet with virtually no debt. On the weaknesses side, their high valuation could be a concern. Those lofty PE ratios might deter value investors. Plus, they're dependent on the performance of third-party mines. If a partner underperforms, it hits their production. Opportunities? Gold's long-term outlook remains strong as a safe haven, and WPM is well-positioned to ink new streaming deals with their cash reserves. Their focus on sustainability, like the Cedos Water Partnership, could also win over ESG investors. Threats include volatility in metal prices. If gold or silver tanks, so does their revenue. Geopolitical risks at mine locations and competition from other streamers or direct miners could also pressure margins. Overall, they're in a strong spot, but the high valuation and external risks are worth keeping an eye on. Let's take a look at recent performance. Over the past week, WPM is up 5.9%, and over the last month it's gained 6.4%. Zoom out to 3 months, and the stock has skyrocketed 50.95%, with a 6-month gain of 61.28%. Over 1 year, it's up an incredible 114.98%, and over 5 years, a whopping 278.12%. This outperforms both the gold industry and the broader basic materials sector by a wide margin. On the chart, you can see a strong uptrend, especially over the last year, riding the wave of rising gold prices and market uncertainty. Short-term, there's momentum, but with such a run-up, I'd watch for potential pullbacks, maybe a dip to key support levels if profit-taking kicks in. Long-term, the trend looks bullish as long as gold stays strong.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. all in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our Stock's Intrinsic Value Calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow